Good evening. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Wednesday evening, the 27th of July, 2022, about 7:05, 7:10 p.m., right in that area, getting about 7:07 to be honest, p.m. Central Time. So we had the FOMC meeting. We got a 75 basis point hike, and with that, the stock market roared. Number one, it wasn't a 100-point hike. Number two, the Fed chair certainly sounds like a dove. He made changes. They're going with just forward guidance. I guess he was listening to Christine Lagarde, the president of the European Central Bank, with no more forward guidance, that every single meeting is live. But isn't that what we've been told before by the Fed? So I guess I'm confused because that was already the case. He's arguing the case that even if you get another quarter, which is tomorrow, we'll get a report on GDP. If it's negative, we're still not in a recession. And as an academic, I'll back him up. That is correct as an academic, because you don't have the unemployment shooting up. In other words, the rates are still near a historic low. The true definition is back-to-back quarters of losses. The second part is you have to have unemployment go up typically by about a 0.5 percentage point for an academic to say we're in a recession. As a businessman, where the heck has he been? He's an academic. Talk to businesses. Why are we seeing so many companies suddenly saying they're not going to keep employees? They're getting ready to lay them off. They can use the excuse, oh, we're moving from an automotive, from combustion engines to electric engines, in software companies. Well, you know, it's right now not a time we're going to expand. The advertising's off. We're going to let go of 6,000 people here. These numbers are big. The amount of people that still want jobs is large. The amount of people with more than one job is really big. And that's because workers work, and those that don't want to work don't take jobs. You don't have to accept what I'm saying. But come on. I look at, unfortunately, in Chicago at the homeless, they're everywhere. Get a job. Everybody's got a for sale, for hire. They don't take them, okay? I don't want to go down that road. I realize there's plenty of homeless that are homeless because of mental issues that have overwhelmed their life. I get it. I'm a guy on the street and I give the money. I promise you I'm one of those people. But I'm also a guy that looks at the young, healthy guys that are carrying their signs, I'm homeless, and they're standing in the middle of the streets. And they want me to give them. I'm not giving them. I know they're going to the meth clinic or wherever they're going after that. I don't buy that excuse. I'll help them. I'll buy them a meal. And I'd help them get a job if I could. They don't want that. So it's a choice of a lifestyle. So don't write me about all that, but I feel strongly about it, and I am a giver. Okay, so where does this put the markets? Yin-yang. What do I mean by yin-yang? At 1 o'clock, we get the statement, which we had, p.m. Central Time. Then at 1:30 to 2:30, the Fed chair talks, answers questions from the press, and there were great questions today. But at that time, Europe, they're out to dinner. It's 6:30 to 7:30 in most parts of Europe already. They've left the office, or they've left their trade desk. They're doing whatever. Asia, they're sleeping. They're going to wake up now, and they're going to start looking at the big rally and decide, was it warranted or should they fade it? And then it goes back to Europe. That's how it's going to work, and then we'll see it. Then we walk in at 7:30 to a GDP number that we've already been told by the head guy, it doesn't matter. Even if it's negative, it's subject to a lot of revisions. Okay, that's what you believe. Terrific. I'm not in his camp. I think he's way smarter than me. I don't think I belong at the same table with him. But it doesn't mean I have to accept his point of view. I think 2 quarters of GDP is a sign the economy is weakened, period. I'm not saying you'll get it. The latest estimates I saw were suddenly a slight bend positive of a 0.3% gain. We'll find out in the morning. I do accept the fact that employment is a powerhouse, and we see that, and it's staying strong, and it gives the Fed the leeway they want. But at the end of the day, the market seems to have walked away with the idea that sooner in 2023, rather than later, the Fed will be throttling back or stopping these increases. That's the take I think the market had today. When you look at the dollar index, which surprises me. I hit that. I should be right here. S&P index, my finger hit the wrong one. I think we can rally, like I said, maybe to the 18-day average, but it's a bear market rally so far. I am not in the bull camp. On a weekly chart, as a chartist, you still have downside bias. You've been rallying into resistance. On this chart, you can see how the market's got the pattern of higher lows, higher highs. That's certainly bullish. The market is over the 18-day average. That part is bullish. One of the resistance points could be the 41.21 level. We haven't been up to a level like that since back here in May. That would be powerful. But unfortunately, it's got a brick wall right in front of it. It has the Bollinger Band, and 95% of the time, the market has resistance at the top band and support at the bottom band. And this is where people get the most bullish, and I'd be very careful. Let's assume you buy it here. Let's assume that. So you're telling me it's going to keep staying over the Bollinger Band. I want the other side of that bet. 95% of the time, it doesn't. So it's going to pull back within the band. That's the concept of it. What about slow stochastics in terms of momentum? Are they embedding? Well, in order to embed, you have to have 3 days in a row where both numbers are over 80. So you had 1 today. The most you could have is 2 tomorrow. You're overbought. That's at least my interpretation of where you're at. In the NASDAQ, overbought, not embedding. At the upper band, the combination with the 100-day and that, lethal. It's generally major resistance. So I'm looking at the charts, and I think you've just rallied into resistance points, and I think the pros are going to take money off the table. I know I'm probably wrong, but that's what I'm expecting in this market. The strength of the market is the Dow. Now, you got to look at the individual companies and how their earnings just came out, and they have been good for some of these big companies, and that's been helping this. But I want to go on record again. I believe that between the Bollinger Band and the 100-day average, you have serious issues. I don't think you're going anywhere. I think the mass of the rally has already taken place. Russell, overbought, not embedded, or is it? Well, let's take a look. You can't count today, which is Thursday. So you go back to yesterday, and the day before you weren't embedded. Can't embed. That means you're just plain overbought into key resistance zones. I'll let the next guy buy it. My money says the pros take their money off the table here. If you're looking for a place to peel back some things you've owned that you've wanted to get rid of, this could be an excellent spot from my perspective. And what do I know? I'm a Swiss cheese guy. I'm wrong so often. In the VIX cash, lower highs, lower lows, fighting the battle right where it should. The 200 to the 18-day average. You lost the embedded reading, and look what happened today. This is fun to look at. Let's see if I can get this to come. It lost it, and it doesn't want to give me the move. I'm not going to be able to. Well, I might be able to. Let me do one thing. Sometimes this works. There you go. I got it. So here, you lost the embedded reading for the first time with the 22 reading. The only time the market can re-embed is the day after it's lost, and both numbers have to get back under 20, which it did. So in the morning, if you're losing it again, probably a sign the stock market's going to fail. If you start dropping away, probably a sign you're going to rally more into the Bollinger Band, those 100-day averages. That's how I'm using that. We then get to the T-bond. First, it's overbought, fighting at the upper Bollinger Band with support at the 100-day average. That's the battleground. Trend is up for a bit, but it's too overbought. I don't think you're attracting buyers up here. 10-year note, the same thing. I don't think you're attracting buyers there either. In the dollar index, okay, the dollar's been fighting, present tense, fighting a big battle at the 18-day average, trying to figure out what next. However, it hasn't thrown out a buy or a sell signal, and it's oversold, caught in the middle of no man's land. In the eurocurrency, getting a bounce to the upside, and any further gain, you add another 15, 20 points. You're going to be in overbought territory, possibly, with a 70 reading. I'm not liking the long side of that. British pound, what are the odds of staying over the Bollinger Band? 5% of the time. So you've had this heck of a rally off of a terrible set of political events and economic events that has carried the day in the market. I do think the pros are going to come out, and I think they did get long that market, and that's what I think they're doing. Bitcoin, August, that's the one you want to be looking at now. Trend down, bias up, momentum flat. Not much you can do there. In Brent versus WTI, still stuck over $9. That's powerful. That's not bearish. And as you look at the market, higher lows, higher highs, you're now fighting at the 100-day average. If you clear that, the next stopping spot's 109.73, 109.70s, the upper Bollinger Band. To negate this bullish pattern, you'd have to get back under 103.72, and that's $3 away plus. WTI has not gone with it. By the way, what if I tell you this brilliance of the Biden administration again? And I am not picking on Democrats. I am picking on the Biden administration, and don't link one with the other. We're giving 1 million barrels a day out of our strategic reserve, and we're exporting 4.5 million barrels. So let me understand, you can buy at a favorable price from our strategic reserve or give it away to somebody. They take it and they're exporting it? Did you know that was going on? I can't make this stuff up. It is insanity. It isn't right. If we have enough oil to export, you don't release the strategic reserve. Nuts. Gasoline. Okay. I still think this was your trade bottom. I think momentum has shifted in the market rather dramatically. I don't think it's ready to go up very much because this combination of 323 to 330 is pretty stiff right there. You'd need an event of some type that I don't know what that is, but I don't see a reason to be bearish anymore. I think the market has worked off the excess in it, and it just looks to me on the chart, and I was looking at the weekly charts, that it's not so bad looking. In the nat gas, today I had a hard time in this market. I left money on the table. Let me share this with you. I'm looking at the market real hard when it was 8:35, I believe it was today. It was 8:37 to 8:35. I remember the break. Yep, it was around 8:37, and I was putting out my morning update, and I'm going to my traders, and I'm going, at that point, it was still barely embedded. When I use the word barely, a 2-point drop from there would have taken it not embedded. I saw that, and I could figure out with the stochastics what it is. So I didn't put out the buy signal, and of course from there the market takes off and goes to the upside and goes like, let's see if I can show you. Yeah, that's it. Moves on up, and bingo, here you go with the correction, and comes back a bit. Well, now you're losing the embedded reading. It's one of those plays. Do you want to do it or not? Why I liked it, because natural gas has nothing to do with the Fed. Natural gas has to do with European demand and heat that's going to come back into the United States next week. Got to pay very close attention to it. Okay. So I've given you my whole crazy scenario as to how I think, what I'm looking at. And what I did tonight, by the way, is I wrote a lengthy report. So if you haven't received my research, watch. Move your cursor up here. Click on at the top of the screen. It'll take you to our free, the word is free, offers. Sign up for my full research gives it to you for a week to 2 weeks. You'll see what I'm talking about. Everything I'm talking about tonight, I wrote about in detail and a lot more in tonight's research report, giving you my opinions as to where they're at and where they're going in the different markets. And I think tomorrow is going to be a volatile day. I'm Ira Epstein. I appreciate you watching this. I will talk to you all tomorrow.